Okay, think about your day. Chances are you paid for something online. Maybe got paid yourself. Or, just tapped your card somewhere.
Right. We do it all the time.
We do it constantly. Yeah, almost without thinking. But what's making that digital money move? What is the system we're using every single time we don't use actual cash?
It's a system that's, well, it's quietly changed everything in finance, hasn't it? It's handling just staggering amounts of money every second.
Wow.
And because it's so central, understanding it is what's really crucial, especially when you start talking about security and, financial crime.
Absolutely. And that engine, that's what we're diving into today. We're doing a deep dive into electronic funds transfer EFT.
Hmm.
And our insights, they're coming from an excerpt called Electronic Funds Transfer EFT FinCrime Intelligence.
Yeah, and the goal here, our mission for this deep dive, is really to kind of pull back the curtain on EFT. We want to get into how it works, the different shapes it takes in our lives, why it's such a big deal for fighting financial crime, the benefits, sure, but also the risks, lurking out there, and where it's all heading.
So by the end, you, the listener, should have a much better grasp of the plumbing, I guess, behind so many daily transactions.
Exactly, the financial plumbing.
Okay, so let's unpack this. At its most basic level, what exactly is an electronic funds transfer?
Simply put, it's just a transaction moving money digitally from one bank account to another using electronic means, no paper involved.
Right, no cash, no checks. So when my salary lands in my account, that's an EFT.
Yep.
Paying my power bill online,
That too.
buying something with my debit card.
All EFTs.
Yeah.
Perfect examples. Behind online shopping, those automatic bill payments, direct deposits, payroll, pensions, benefits, and even when you pay at the counter, point of sale.
It's everywhere.
It really is. But, while it's super convenient, the source material points out, and it's important, that EFTs can be vulnerable. Things like unauthorized transfers.
Ah, the fraud aspect.
Exactly. Which is why banks and financial institutions put so much effort into, security measures and monitoring systems. They have to protect these payments.
Okay, so it's digital money movement, but how? How does that automated transfer happen? Like, how does the money just know where to go without someone pushing a button for every single transfer? It feels a bit like magic.
Huh. Yeah, it can seem that way.
Yeah.
But it's not magic, it's networks. It works through these highly secure, specialized networks. Think of them like dedicated digital highways just for financial messages.
Okay.
Transaction info travels on these highways. Sometimes it's in real time, like instantly. Other times, transactions are grouped together in batches and sent at scheduled times.
Batch processing, right.
Exactly. And this whole setup is used globally, for transfers inside a country and internationally, too.
Ah, okay. So that difference you mentioned, real time versus batch, that kind of explains the different types of EFTs we run into.
Precisely. The network it uses and how it's processed, that really defines let's say, the flavor of the EFT. So you've got common things like ACH transfers, that's often the batch processing you see with direct deposits, or maybe some online bill payments.
Right. Those might take a day or two sometimes.
Exactly. Then you have wire transfers. Those are usually the real-time ones.
And what about the others the source mentioned, debit and credit cards? Direct deposits specifically for payroll, pensions, benefits, online bill pays, e-checks, point of sale.
Yes, all of those fall under the big EFT umbrella. But, and this is interesting, each one has its own way of working. They differ quite a bit in like how fast they are, how much they cost the user or the business, and the specific rules and regulations they have to follow. And those differences come down to the particular network being used and the institutions involved in that specific transaction type.
Okay, this is where it gets really interesting for me. The document we're looking at really zeroes in on EFT and financial crime risk. Why is that? Given it's digital, automated, often crosses borders, why is EFT such a huge focus for banks trying to stop bad actors?
Well, it makes sense if you think about it. Criminals want efficiency too, right? EFT offers speed. It offers a digital trail that, believe it or not, can sometimes be obscured, and it lets them move money across borders fast.
Okay, so how do they actually exploit it? What does the source say?
It lists a few key ways. Money laundering, obviously moving dirty money through layers of accounts or different countries to hide its origin.
Layering, yeah.
Terrorist financing, it can be a discreet way to send funds to groups or individuals overseas. Then there's straightforward fraudulent transfers using stolen bank details or even fake identities, synthetic IDs.
Scary stuff.
And also sanctions evasion, trying to get around international sanctions by hiding who's really sending or receiving the money. maybe through complex payment chains.
That's quite a list. So faced with all that, what are the banks and financial institutions actually required to do? What's their obligation?
This is where compliance really bites. They absolutely must monitor EFTs very closely. We're talking sophisticated tools looking at transactions in real time as they happen, but also looking back. Post-transaction analysis, searching for suspicious patterns over time. They operate under really strict anti-money laundering AML regulations.
Okay, and what do those AML rules demand specifically for EFTs?
Well, key things include robust customer due diligence CDD. Basically, know your customer.
Right.
Continuous transaction monitoring, specifically searching for unusual activity or payments going to high-risk places or people, filing suspicious activity reports, SARs or STRs, depending on the jurisdiction when something seems off, and constantly screening everyone involved against official sanctions lists and lists of politically exposed persons or PPs.
So it's a constant vigilance.
Absolutely. And the source stresses having these strong compliance frameworks isn't just box ticking. It's what actually allows institutions to identify and report the risky EFTs,
Yeah.
stopping crime, yeah, but also protecting themselves from huge fines and, reputational damage.
It definitely sounds like EFT is a very broad term covering a lot of ground. How does it differ from, say, just a wire transfer or something totally different like cryptocurrency? Are they all EFTs or?
That's a really good question because the terms get thrown around. A wire transfer is a type of EFT, yeah. But it's usually distinct, handled individually, processed in real time, generally costs more.
Okay.
And importantly, once a wire is sent, it's often very hard, sometimes impossible, to pull back. Irrevocable is the term often used.
Right, whereas other EFTs.
Like ACH-based ones, they're typically batched together, processed in groups, and settle over hours or maybe a day or two. They can sometimes be reversed more easily if there's an error or issue.
So like an express courier versus standard mail.
That's a great analogy, yeah.
Yeah.
Wire is the express, fast, direct, final. ACH is more like the standard mail, efficient for bulk, a bit slower, maybe some chance to intercept.
Got it. And comparing EFT to crypto, big difference there, I assume.
Oh, huge difference. EFT lives within the traditional regulated banking system. It uses fiat currencies, dollars, euros, pounds, issued by governments.
Right.
Crypto uses decentralized blockchain technology. It's often not tied to any official currency, and it operates outside those established financial institutions that handle EFTs. So the whole regulatory and crime-fighting challenge is completely different.
Okay. And card payments, you said they're EFTs too, but how do they fit in?
Yeah, debit and credit card payments are definitely classified as EFTs, but they have extra layers. They run through specific card networks, Visa, MasterCard, Amex, etc.
Ah, the network processors.
Exactly. So that adds another step. Specific security rules for those networks and often different fees compared to a direct bank-to-bank ACH transfer. The source points out that knowing these distinctions is really important for businesses and even for us to pick the right tool for the job. Cost, speed, security needs.
Okay, so despite the complexities, the risks we talked about,
Yeah.
what are the actual upsides? Why has EFT become, well, basically the default way we handle money?
Oh, the advantages are massive. For individuals, for businesses, for the whole economy, really. Speed and convenience are the big ones, right? Think about getting paid instantly via direct deposit or settling a bill online in seconds.
Definitely beats writing a check.
Absolutely. And compared to paper checks or handling cash, EFTs are usually much, much cheaper to process.
Less manual work.
Less everything.
Okay.
For businesses, it's huge for cash flow. Payments become predictable, traceable. That traceability is another key benefit, makes auditing easier, helps resolve disputes way better than cash ever could.
Yeah, you have a digital record.
Exactly. And overall, even with the risks we mentioned, it's generally seen as more secure than carrying lots of cash or sending checks through the mail. So yeah, that's why it dominates everything from salaries and paying suppliers to getting tax refunds and handling utility bills.
We touched on the AML rules earlier, but what about the wider regulations? Who sets the rules for how these EFT systems operate generally?
It's a bit of a patchwork, honestly. The rules depend on the country and the specific type of EFT. But generally, they fall under broader financial services laws and, of course, those AML-CFT regulations.
Any specific examples the source mentions?
Yeah, it flags things like the Bank Secrecy Act, the BSA in the U.S. In Europe, there's the Payment Services Directive 2, or PSD2. And globally, the FATF recommendations are influential, especially regarding wire transfers and needing to keep records. Plus, you've got local central banks issuing their own guidance on how payments should clear and settle.
So it's a complex web of rules designed to keep the system safe and transparent, not just fight crime.
That's right. The regulated players, the banks and payment providers, they have to keep detailed audit trails. They need to record all the transaction data meticulously, and they're required to constantly assess the risks in their payment systems. It's ongoing.
Okay, we've seen the good, the rules, but let's circle back to the bad for a moment. What are the current big challenges? The emerging threats that keep compliance folks up at night in the EFT world?
Well, the threats evolve just as fast as the technology, sometimes faster. The source highlights a few big ones. Account takeover ATO is still a major headache.
Where someone gets into your actual account.
Exactly, often through phishing or other social engineering tricks to steal login details. Then there's business email compromise, BEC. That one's really nasty.
How does that work again?
Basically, fraudsters impersonate a senior executive or a vendor via email and trick an employee into changing payment instructions for a legitimate invoice, sending the money to the fraudster's account instead.
Oof. That doesn't even need technical hacking, just deception.
Precisely. It's incredibly effective and causes huge losses. Another big challenge is the rise of real-time payments. Great for speed, like we said.
But bad if it's fraud.
Exactly. If a fraudulent payment settles instantly, getting that money back is extremely difficult, sometimes impossible. The window to act is tiny. And then there are ongoing data privacy worries, especially with cross-border payments hitting different legal zones like GDPR in Europe.
So how are institutions fighting back against these newer, faster threats?
It's all about layered security. No single silver bullet. It involves things like really strict transaction verification steps, using behavioral analytics, watching for activity that's out of character for a user.
Like logging in from a weird place?
Yeah, or suddenly sending a huge amount somewhere new. Also, multi-factor authentication, MFA, is crucial to stop simple account takeovers. And importantly, constantly training staff to spot things like BEC emails. The human element is still key.
Right. Okay. Looking forward then. What's next for EFT? Where is this all heading?
Speed and integration seem to be the main trends. We're definitely seeing the growth of instant payment networks globally. The source mentions FedNow, which just launched in the U.S.
Yes, I've heard about that.
SEPA Instant in the EU has been around a bit longer. UPI in India is huge. The goal is always faster settlement money moving in seconds, not hours or days.
Which everyone wants, presumably.
Generally, yes. These networks aim for that speed, better interoperability, making systems talk to each other more easily, and hopefully bringing more people into the formal financial system, financial inclusion.
But the catch?
The catch, as the text notes, is that speed ramps up the pressure on fraud detection and AML systems even more. Less time to catch suspicious stuff before the money vanishes.
Makes sense. Any other big shifts?
Yeah, the other major thing is the impact of API-based banking and what's called embedded finance.
Embedded finance. What's that?
It's where financial services, including payments like EFT, get built directly into non-financial apps or platforms. Think paying for something right inside your social media app or your smart fridge, ordering and paying for groceries automatically.
Whoa. So finance kind of disappears into the background.
Pretty much. It blurs the lines between a traditional EFT transaction and just using a service, which is convenient for sure, but it means financial institutions have to adapt really fast to operate securely in this much more integrated landscape, all while keeping up with compliance and making sure their systems are resilient.
Wow. Okay. So we started with something as simple as, paying a bill online, and we've gone through the hidden networks, the different ways money moves digitally, the huge role EFT plays in financial crime and compliance.
The benefits, the rules.
The benefits, the rules, the very real risks today, and now this future of instant payments and finance just being woven into everything else.
It really drives home how these systems, even though we barely notice them, are absolutely fundamental. They're the backbone of our personal finances, yes, but also the entire global economy.
Absolutely. And thinking about that future you described, faster, more integrated, almost invisible EFT inside other apps. That embedded finance idea really makes you pause. It prompts a question, I think, for you listening. As moving money becomes less of a distinct action and more just, part of the flow of using some other service, how might you need to shift your thinking about securing your own finances, about really tracking where your money is going in this faster, more complex digital world? It feels like awareness is becoming even more critical.
That's a crucial thought. Awareness is key for navigating what's coming.
Indeed. Well, thank you for joining us on this deep dive into the world of electronic funds transfer.